Hey friends, I'm back with another video about dividend stock investing. I'm traveling here for work, so I thought I'd do a quick vlog here while I'm on my walk. I have three topics I want to cover today. I want to cover the falling stock market, I want to cover dividends versus real estate investing, and I want to cover some thoughts on my move from the Bay Area, where I'm visiting right now, to Boise, Idaho. So the first topic is about falling share prices. We're seeing right now the stock market correct, and it's correcting aggressively. As a dividend stock investor, I'm actually really excited about this because all I really track is the income that I receive on a monthly basis from dividend stocks. That's what I track, that's what matters to me, because I can use the dividends to pay my bills. When share prices go down, that's actually a good thing, because the money that I deploy or I reinvest, because I am reinvesting some of my dividends still, that money goes further. It produces more incremental cash flow as share prices get lower. A lot of dividend investors out there on the internet, on Twitter, elsewhere say that, hey, they love it when share prices fall. It's exciting for them. Now, I'm going to speak from personal experience. I've been saying this many years, but honestly, in my earlier days when share prices fell, I felt it. It was a little bit scary. I would kind of try to fool myself and be like, hey, this is great, this is good because I'm a dividend investor. But in the earlier days, I would say that, but it would be a little bit difficult to believe. I can tell you right now, having been in the game a very long time and having been through many market cycles, I actually do feel excited now when share prices fall. So I've gotten to that point where I really don't care about portfolio value. Now, you may hear some background noise. I'm near a dog park, so hopefully you just hear me speaking, but you know, it's kind of rush hour. There's some cars driving home and some dogs there barking, so bear with me here during this fun vlog. But I wanted to get into something really interesting. I posed a question on Twitter the other day, and the question kind of went like this: who receives more joy and satisfaction out of life and out of kind of this financial journey? Dividend stock investors or total returns investors? And of course, the results were a bit biased because I asked my followers on Twitter, which is largely dividend investors, but the overwhelming majority of investors there believe that more joy out of life is possible being a dividend stock investor. And I kind of asked this as a loaded question, if you will, because I believe that's the answer as well. And so sometimes there are total returns investors out there, or capital appreciation investors. Now, honestly, you can be a dividend investor and a total returns investor, because dividend growth investor, my friend over on Twitter kind of pointed out they're one and the same, especially for dividend growth investors. Those that incorporate higher yield strategies, that's a little bit different than total returns. But anyway, I guess a better way of even saying it is dividend investors versus capital appreciation investors. It's surely possible and easier in a market like this to see why dividend investors, they can just experience a little bit more joy and satisfaction out of life. At least I can, because I'll tell you, these last few days have been really busy. I've been working hard. I was on the road a lot today visiting a real estate property. I'm going to talk about that in a minute. It's a property that I have an ownership interest in, and I'll talk about that, why it's very active versus how dividends are passive, but we'll talk about that in a minute. But I have free time not to worry about portfolio value. I don't worry if the portfolio is up or down. And I feel being a dividend investor, especially in a market like this, it's a bit freeing. I feel free. I feel that sense of freedom because I'm not tied to my portfolio value. I'm not worried about portfolio value. In fact, I know when portfolio value is down. I can truly feel some of that joy now, where it's kind of forcing that joy in the earlier days because I was like, oh man, it's hard to see the portfolio value dip. But now I truly feel that. And so that's why I asked that question on Twitter, because I'm at the point in my journey, for my personal experience, for my personal persona at least, that I do feel dividend investing, it is more about having joy and satisfaction out of life, because we can pay our bills with these dividends. It's something we can track. It goes up over time, even when the markets are bad, as long as the investor selects great stocks. Whereas these kind of total returns investors who are very focused on capital appreciation, when times are bad, it is a scary strategy to be part of. It is something I wouldn't want to be part of. It's something that would be hard to not abandon. And I think that's a point that Stephen Bavaria makes in his book that my friend Greg, the Dividend Monster on Instagram, he had suggested that book to me. And one of the points Stephen Bavaria makes about his high yield strategy where he's reinvesting dividends is it's more motivating for the everyday person. It's difficult for the everyday person even to stick with this capital appreciation strategy when we're in markets like we're seeing right now where the market is down like 6 days in a row and it's really volatile. And so that's something else that I wanted to point out. And what's so interesting about dividend stock investing that I think a lot of people just get wrong, as long as I'm kind of vlogging today, I'm a little bit all over the place, but put in the comments below if you enjoy the videos like the one today. I hope you do. I'm just kind of throwing it together here while I'm on my walk. But I wanted to share something because a lot of total returns or capital appreciation investors, they're kind of saying dividends are a scam or dividends don't work. Dividends, it's the same thing as capital appreciation investing because all it's doing is it's forcing you to sell shares. That is not true. When you receive a dividend or I receive a dividend, it is coming from cash flow as long as the company is well managed. It's a good company. Companies like I own, like Johnson & Johnson, for example, which I'm buying right now. When J&J pays a dividend, they're taking cash from their bank account and distributing it out. That is very different than if I were a capital appreciation investor and I had to sell a share or 2 shares or 10 shares to pay my bills. Shares go up and down, but more importantly than that, when I sell a share of stock, I'm not just selling the cash portion. Each share is comprised of different kind of components of value. Part of that value is the cash they have in their bank account, but most of that value is the enterprise. It's the ability for that enterprise to generate future cash flows. And so when I sell shares, I'm not just selling off the cash portion that they're holding, I'm selling off everything. Maybe 10% of the share value is in cash if they have a good bank account, but the rest is actually tied up in the value of the business itself and the value of that business being able to generate cash flow. And I think that's where these investors who are saying it's the same thing, it's just forcing you to sell shares, they're flat out wrong. They're super wrong on that because as a dividend investor, I don't have to sell off the part of the share that's generating cash flow. And now these people may argue, well, they could have taken this dividend that they paid and reinvested it in the business and used that to generate more cash flow and increase the enterprise value. Maybe that's true, but the types of companies I own, they're very responsible and they are still investing in R&D. They are still reinvesting back in the company itself. And honestly, having worked at enough companies where I just see cash get squandered, I'd rather have that cash come my way. And so dividend stock investing, there's so much joy in it and we can see it in this kind of market. In my opinion, this is the best kind of market to be a dividend investor because I just care about that cash flow growing over time. And so that was kind of the first topic that I wanted to discuss today in the vlog. The second topic that I want to discuss in the vlog today, shout out by the way, if you're from the Bay Area or you live here in Foster City where I am right now, you can see one of those boats going by in the lagoon. Put in the comments below. I met up with my friends Sam and Mike, who are local investors here in the greater Bay Area, OG investors. I had a great time with them at Waterfront Pizza the other night, and we had a lot of fun. So it's great seeing you, Sam and Mike. Thank you for that. Thank you for making it. And so I just want to keep going. I'm looking at my notes here. Boy, dividends versus real estate. Oh my gosh. A lot of you know I have a career in real estate and I have interests in real estate properties. And one of the things I just wanted to say is sometimes I get these questions, Ian, what's better? Should I invest in real estate or should I invest in dividend stocks? Well, I do both, but I vastly prefer dividend stocks. And when I say dividend stocks, I'm referring to dividend stocks and also REITs, real estate investment trusts as well. I lump that in with dividend stocks. Dividend stocks are true passive income. Real estate is not. Real estate is super active. And so one of the things I wanted to say about real estate is even if you're an owner like myself, you can delegate some tasks. You're gonna have a property manager, you're gonna have people that help you, but when you're an owner, you're gonna be a hands-on owner if you want the enterprise to succeed. That is, if you want the enterprise to succeed, it's not like working a corporate job. When you work a corporate job like I used to in tech and I had a large team, I could delegate most of the work and I was almost a pure people manager at one point when I got high up. But when you're a real estate investor, even if you're really high up or you have a great size portfolio, even if you have a team of people, it's still always going to be really active and hands-on. So I was driving over 4 hours today out to a property, spent 3.5 or so hours meeting with the team out at the property. It was a very great and wonderful meeting. But the thing I would say about real estate in general is buildings are kind of living entities. Buildings need to be maintained. Buildings need to be managed. Buildings need to have a life cycle of just work that gets put into them. There's a lot of work that happens on the leasing side of things, on managing customers and all of that side of things. It's a very, very active way to earn a quote-unquote passive income. Take it from me, I am telling you. And so from my experience, just as someone who aspires to spend less time working because I work like crazy, I know from my personal experience that dividend stock investing, that is where it's at, because it's true passive income. It's the only vehicle I have ever found, and I'm talking about REITs as well, where it's totally hands off. Everything is delegated, other than maybe compiling one's personal tax return or keeping some records, tracking that passive income growing over time, tracking portfolio value if you're into that. But like I said in segment 1, I'm not even into it that much. Now, of course, there are some benefits with real estate. For someone that develops real estate in the early years especially, or acquires real estate, there's this concept of depreciation, and there's accelerated depreciation as well. And so there can be some great tax benefits with real estate. But later on, honestly, the depreciation goes away, and when the real estate starts bringing in a lot of money, even if all that money is not distributed, those K1 owners of the real estate enterprise have to pay taxes on all of the earnings, even if it's not all distributed to unit holders. And so it's kind of a two-way street. Like in those early years, there can be some great tax advantages to being a real estate investor, but later on in the life cycle, it all catches it up. It all comes back. It's kind of, you know, good in some ways, but also it doesn't last forever. The other thing about real estate that's kind of interesting is the concept of leverage. And so banks are willing to write loans against real estate properties, and historically interest rates have been a bit lower than they are right now. Or I say historically, I mean in kind of the recent last decade, but now rates are higher, and so it's a little bit more difficult even to have the kind of leverage that real estate investors had before, at least if one is being prudent. And so that's gone away a little bit as well. Don't get me wrong, real estate is an amazing career path. It's an amazing job. It's an amazing investment. I love what I do in real estate. It's very fulfilling. I have a lot of fun, but it is very hard work. I will tell you, the reason I didn't have a lot of YouTube videos this year so far is I've been working harder than I've ever worked in my career, even probably back when I was in tech. And when I was in tech, I was working crazy hard. Thankfully, I never gave up on my fitness this whole way, which is really wonderful. And that's why I worked out even earlier today while I'm traveling, and now I'm on the walk trying to keep it up. But I'll just tell you, from my vantage point at least, having done both, they're both great investment strategies, but dividends are the way to go for someone who doesn't want to kind of roll up their sleeves and have that kind of active participation. And so that's that. I'm just checking down. Oh, one more thing I wanted to say. I've got my notebook, you know I do. Oh gee, I got to represent Stanford here because I'm in Stanford territory these days. But what I would also say about real estate is just be wary. There's a lot of kind of scams out there. There's a lot of get rich quick. There's a lot of people that sell this concept of this get rich quick real estate can't lose kind of thing out on Instagram, on the internet. A lot of these people are raising capital, investors that invest in their real estate projects, and they claim, hey, it's passive income for you. Hey, maybe it's passive, but I would just say in general, be wary. Based on how I've underwritten my own deals and how I've looked at real estate models here in 2024 and also in 2023, times have changed in real estate, and some of these numbers that these syndicators or these folks promise online, it's not necessarily reality. It's not necessarily what you would actually see in the real world. And so just, I would say some of these models, they're a bit aggressive, and maybe it's just because the people doing the models mean well, but they haven't really kind of caught up with where things are at right now. But just be careful out there. And so I would say the returns right now from a really great REIT like Realty Income, which is a huge position of mine, one I want to make even bigger than it is right now, That's probably a reasonable rate of return, quite frankly, I think personally, from the commercial real estate world right now. So something else I wanted to mention in the video today, kind of segment 3 of this vlog. I hope you're enjoying it. Sun's kind of going down. It's very peaceful, very beautiful here. And this is a perfect time actually to mention this. When I was having dinner with Mike and Sam the other night, I moved to Boise, Idaho, and I'm here visiting for work. They asked, Ian, is there things you missed about the Bay Area? What you see behind me right now is probably what I miss a lot out of everything. It would be that kind of fresh water breeze, that fresh water air quality. It's amazing. In Idaho, in the kind of high desert, we're at about 3,000 feet above sea level there. It can get a little more dry, and so it takes time for your kind of skin to catch up. You have to wear like a lot of skin lotion just to kind of keep it good, stay so fresh, so clean. But also I would say just in general, you run some humidifiers, it's a little more dry, the air there. I'd also say I miss a little bit of the walkability, because in a city like this, Foster City, very easy to walk from your home to the bank or to grab a bite of food, but versus where I live now, it's more suburban and I'm driving a lot. Other than that, I would say there's not too much I miss, other than some friends, obviously, like Mike and Sam. It was really good to see them because it had been a while. But boy, we're so happy with our move. I want to do kind of a whole nother video on this topic at some point, because it's too much to cover today. Too much. But I know so many of you are curious, like, what has our life been like since we moved to Boise, Idaho? And I'm talking about personal finance here, dividend investing. So today is a perfect day just to kind of talk about it from a personal finance perspective. I'm going to tell you that overall it's just a better setup for our family. We have a much bigger home, the kids are happier, wife is happier, I'm happier, everyone's happier. We've got a better setup, a better home base, but also our finances, our personal finances are in far, far, far better shape. And so one of the things that's just great is I can actually enjoy kind of the Bay Area or wherever I visit now a little bit more than I could before, because I don't have the pressure that I had before. Our finances are just in better shape. So I have a great home base and I have an opportunity to travel more. I have an opportunity to travel for work. And thankfully for my work, I can travel like this, and it helps me build things like a hotel and airline status, get a lot of points, which also helps me when I'm just traveling with the family, because I have great status on the airlines. And so and I can get free flights sometimes, free upgrades, all that kind of stuff. And so anyway, having a home base like that sets us up better financially is just a complete kind of home run for us. And I would say that's kind of game over at that point for us. That's been such a good move. But I'd say there's so many other things about Boise, Idaho area, greater area, that resonate with us. Just it's for raising a family, it's a great place to be. We have more space for our family. We have a lot of fun skiing and snowboarding. I'm a snowboarder, so I've enjoyed that. We go a lot during the winter, and it's a really active kind of outdoor area, so I'm in the best shape of my life. My wife is in great shape. We're doing so much. The kids are really happy. I'd say the school situation for kids is really good, but this is a topic for a whole nother video. I just wanted to kind of share it from a financial perspective, at least, how it's kind of panned out for us. And so if you're ever thinking about that geo-arbitrage, I think dividend investors sometimes here in 2024, they're thinking, how can they set themselves up for that next step? How can they get to that next level? We live in a world where remote work, it is possible. I'm living proof. I have a property literally here in the Bay Area, but I don't live in the Bay Area yet. I went out there today and was able to meet with the team, and it worked out great. And so these kind of things are possible. All right, everyone, I've been going on a while today, so that's just my quick vlog for today. I love you all. Thank you so much for watching, following along. I look forward to seeing you in the comments section below as well. If you enjoyed the video, please don't forget to click the like button as well. Before I go, I do want to share my full disclosure. I am long the two stocks mentioned today, Johnson & Johnson, ticker J&J, and Realty Income, ticker O. I own those in my personal dividend stock portfolio. Before I go today, in terms of a friendly disclaimer, today's video, it's not investment advice. I'm not a licensed investment advisor. Today's video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult your licensed financial advisor first. It's possible to lose money in the stock market. Sun is going down, so it's the perfect time to sign off. I'll see you all in the next dividend stock investing video, and I'll see you in the comments section below.